there, good morning. You're watching Market Cafe on ET Now with me, Snehi Shah, and along with me is my co-anchor Ankita Saxena this Monday morning. Ankita, take us through what the global handover looks like, and we'll also discuss the domestic cues, the cues that you should be tracking for the rest of the week, as well as the stocks that you should be watching out in today's trading session. But before that, let's look at what the global handover looked like, Ankita.
That's correct. Good morning, Sneha, and good morning to everyone. Now, Sneha, there are two things that are happening in the US markets. One is the fact that China, after opening up, hasn't done really much, and that's showing in the market and the global markets as well. And also the fact that the US bond yields have been inching up. Now, the recent rise in bond yields and China's economic woes have left major benchmarks with another losing week. Now, on Friday, all the indices were absolutely flat, but for the week, Dow has fallen 2.2%, its worst since the month of March. S&P 500 slid 2.1% and the Nasdaq dropped 2.6% during the week. Now, the S&P 500 fell 2.1% during the week, posting a third straight week of losses, a streak that hasn't been seen since the month of February. Nasdaq Composite shed about 2.6%, tumbling for a third consecutive losing week, a first since the month of December. Now, mega cap tech stocks were also getting hammered, slumped for a third straight week, the longest such streak in 2023. Now, investors are looking forward to the speech by the Federal Reserve Chairman Jerome Powell this week for cues on the interest rate outlook. Now, Keysight's technology shares lost as much as 14% on the back of a disappointing set of earnings report. That was a roundup of the US markets. Now we'll quickly move on to how the European markets fared. The European markets also retreated on Friday, tracking cautious global sentiments. European shares sank to the lowest level in 6 weeks on Friday, dragged down by the financials and healthcare sector. Stock 600 index closed down more than 0.5% lower, barring some of its earlier losses. FTSE fell 0.7% after data showed that British retail sales have slumped more sharply than expected in the month of July. UK retail sales fell 1.2% on a month-on-month basis in the month of July and 3.2% on a year-on-year basis, primarily due to the persistent poor weather. Now, that was the roundup of the US and the European markets. Nehi, so a negative handover that's coming in from the global markets.
Absolutely, Ankita, and all eyes will undoubtedly be on that Jackson Hole meeting that is going to take place in Wyoming from the 24th to 26th of August. But with that, let's also look at what oil did over the week. And oil prices rose about 1% on Friday on signs of slowing US output. But both crude benchmarks also ended their longest weekly rally of 2023 on mounting concerns about global demand growth. Let's look at what WTI and Brent are doing at the moment, and WTI oil just above that 81.7, just around that mark, with Brent crude just slightly above that $85 per mark, per barrel mark, that $85.2 right now. Now, both benchmarks pushed higher on Friday after industry data showed that the US oil and natural gas rig count, which is an early indicator of future output, fell for the 6th week in a row. A slump in US production could harm an anticipated supply tightness through the rest of this year. Those concerns, spurred on by output cuts from the OPEC countries and allies, helped oil prices gain for 7 straight weeks since June. Brent crude gained about 18% and WTI gained 20% over the 7 weeks ended August 11th. This week, however, oil prices dropped about 2% from last week as a worsening property crisis in China added to the concerns about the country's sluggish economic recovery and reduced investors' appetite for risk across markets. Concern is also mounting that the US Fed Reserve is not finished raising interest rates to tackle inflation, so higher borrowing costs can impede economic growth and in turn reduce overall demand for oil as well. So let's see how this pans out for oil, Ankita.
All right, Snehi. So that was the global roundup of commodities and the global markets. But let's quickly look at the global cues coming in for this week. So we have the US manufacturing PMI data that is likely to come out on the 23rd of August. Back home, we have a lot of action happening in the primary market for the last 2 weeks. And we have TVS supply chain that will be listing on the bourses on the 23rd of August. Aeroflex industry will open for subscription on the 22nd of August and will go on till the 24th of August. And on the AGM front, we have HCL Technologies that will hold its AGM on the 22nd of August, Eicher Motors on the 23rd of August. We have Bharti Airtel that will be holding the AGM on the 24th of August, and Grasim Industries, Aurobindo Pharma and InfoEdge India that will be holding the AGM on the 25th of August. Now in some corporate action, we have Geo Financials that will be listing on the bourses as of today. So that's something that we will be tracking very closely. On the 24th of August is the date to be eligible for buyback for India Mart and for Piramal Enterprises. So that's the lineup for this week.
Absolutely, lots of interesting things to watch out for in trade this week. But with that, let's also look at some global stories that we've been tracking for you this morning. And social media giant X, previously known as Twitter, has deleted all the images from the website that were posted between 2011 and 2014. It's not clear yet if this was an intentional act or if it was an error. This has caused concern among users who've been on the site for over a decade.
And Chinese electric car manufacturer Xpeng reported a wider than expected loss in the second quarter earnings. The company shares plunged around 7% in pre-market US trade. Remember, it was also the biggest quarterly loss for the company that posted since going public in August of 2020.
And China launched a military drill around Taiwan as a serious warning in an angry but widely expected response to Taiwan's Vice President William Lai's visit to the United States, drawing condemnation from Taipei. Meanwhile, Taiwan's defense ministry said it had detected 42 Chinese aircraft and 8 ships involved in drills around the island.
And time for action from the world of sports. Spain has sealed a thrilling win against England in the FIFA Women's World Cup final at the Ochre Stadium in Sydney. The win also helped Spain clinch their maiden WWC title.
Alright, and Russia's lunar hopes have been dashed as the Luna 25 probe, the country's first moon mission in nearly half a century, crashed on the lunar surface during pre-landing maneuvers. Remember, this leaves India's Chandrayaan-3 on course to become the first spacecraft to land near the lunar south pole.
And Russia's Northern Sea route has traditionally been a key route which runs along Russia's northern coastline and is the shortest shipping route between Asia, East Asia and Europe. Now, Murmansk port, which is called the main northern gateway of Russia, handles a significant amount of the cargo headed for India. However, the weather conditions in the region have hampered smooth navigation in the 5,600 kilometers long NSR. Now, what are those and how is Russia really circumventing around it? Well, my colleague Srinjoy Chaudhary is here with the ground report.
Murmansk port is located about 2,000 kilometers northwest of Moscow. It plays an important role, especially for India. In the first 7 months of 2023, the port, which is the main northern gateway of Russia and a transshipment hub, has handled 8 million tons of cargo. Of this, India accounted for 35% of the total cargo. This is primarily fossil fuels, especially coal, which is needed for the power sector. The Northern Sea route is closed for 6 months and icebreakers are essential to carve a passage through the ice. Even with global warming, icebreakers will be necessary for at least 50 years. Without the icebreakers, deliveries in the winter months using the Northern Sea route will be virtually impossible. As of 2023, Russia is the only country that builds and operates nuclear-powered icebreakers. In fact, Russia has built a number of such vessels to aid shipping along the Northern Sea route and the Russian Arctic outposts since the Soviet era.
This is a particularly important one because not only was it the first in 1959, it was a showpiece to the world that the Soviet Union could produce this. Nikita Khrushchev, of course, came here. Fidel Castro came here. Richard Nixon came here. This was the showpiece of Soviet Russia. This was the world's first icebreaker and perhaps a great moment in the history of nuclear-powered ships.
To ensure safe, sustainable navigation in this region, and to increase traffic along the Northern Sea route. Russia has invested in building these top-quality vessels. In the present day, Russia has over 40 vessels in icebreaker fleets, including nuclear, diesel-electric, and diesel-powered icebreakers.
Special research on our demand, and they have made a kind of forecast for the near 50 years, and they say that the ice will stay here in the waters of Northern Sea route.
Russia uses Arctica, one of the world's most powerful icebreakers in the Northern Sea route. It weighs more than 26,000 tons and is powered by 2 nuclear reactors. It was launched 7 years ago, and its primary task is to break through the winter ice in the Arctic Ocean to ensure the passage of freighters, tankers, and other ships.
This is like a unique icebreaker, Arctica. It has taken all the advantages of the previous icebreakers, which we have gained for the last 60 years. And I would say that it's not only the universal icebreaker, it's also a unique icebreaker because it has 2 reactors of new generation. Actually, we can say that the ice is present during all months, but starting from October, it starts growing more intensively, and in the period between November and May.
With global warming, the ice-covered area has become less. But even though it has decreased, icebreakers are necessary for 3,000 kilometers. Besides, melting ice can create other problems.
Icebreakers in the time of global warming, and also let's not forget Fukushima a little while ago. Well, we spoke with the icebreaker people, and they say very clearly that even after global warming, there will be times when the icebreaker will be needed in the Arctic Sea, which is why you will still need icebreakers. With Braj in Murmansk, Srinjoy Chaudhary for Times Now.
All right, with that, let's quickly slip into a very short break. But on the other side, we'll see how the Asian markets have opened this morning.
Welcome back. You're watching Market Cafe, and on to some news coming in on the domestic front. Geo Financial Services, the entity that was demerged from Reliance Industries last month, is set to be listed on the bourses as of today. Now, based on the discovered price of 261.85 rupees, the NBFC's market capitalization totals to 1.66 lakh crores, making it the second largest NBFC in India. My colleague Somit gets you more details on this.
Well, Geo Financial will be listing on the exchanges today, so 9:45 will be the pre-open discovery price, and from 10 a.m. we can start trading when it comes to Geo Financial Services. Now, the discovered base price was 261.85, and at that price the market capitalization comes at around 1.7 lakh crore, which places Geo Financial as the 9th largest financial institution in India by market cap. But if you see the net worth of the company, that stands at close to 1.17 lakh crore, that is including its a 6% stake in Reliance Industries, and by net worth, if you see, Geo Financial would be the 5th largest financial institution in India. Now, given that it has a net worth of close to 1.17 lakh crore rupees, the company's book value per share comes at around 185 rupees, and the valuations, that is price to book, for Geo Financial at a base price of 261.85 stands at close to 1.4x, which is the cheapest as compared to its other larger peers, which are Bajaj Finance, Chola Invest, Poonawalla FinCorp, Sundaram Finance. Also, when compared to other peers like HDFC AMC, PB Fintech, Angel One and Paytm, the valuations of 1.4 times is the cheapest across the board. Now, given the fact that Geo Financial was demerged from Reliance Industries, it will continue to remain a part of Nifty and Sensex till Wednesday. On Thursday, Geo Financial will be removed from Nifty and Sensex, and because of this, there could be some selling coming in from a passive index tracking funds. Now, on Nifty, analysts are expecting a sell-off of around 90 million shares, which is close to $290 million US, and on Sensex they are expecting a sell-off of close to 55 million shares, which is close to $175 million US. Now, what do we know about Geo Financial so far? It will be led by ex-ICICI Bank veterans KV Kamath and Hitesh Sethia, who have more than 20 years of experience working in the financial space, and Geo Financial will be providing lending services. Along with this, it is also looking to enter into insurance broking, digital broking, and also asset management companies. In AMC, it has already signed a tie-up. It has already announced a joint venture with BlackRock. Now, along with this, how could Geo Financial benefit? Firstly, it will have a AAA rating similar to its parent company Reliance Industries, which would lead to lower cost of funding. So far in India, only 6 large NBFCs currently have a AAA rating, and along with this, Geo Financial will also benefit with a very large distribution footprint of Reliance Industries. It has more than 18,000 stores of Reliance Retail, close to 78 crore annual footfall that it sees in Reliance Retail, and when it comes to telecom, it has around 43 crore user base, which will all could help to boost the reach of Geo Financial going forward.
Alright, Swami, thanks a lot for all those details. I'm pretty sure the street will keep a close eye on the listing of Geo Financial today. But along with that, Gujarat Gas is another stock that's in focus today. So, because the Moodys region prices have been increased. So, Swami, take us through what this means for the company going ahead.
Well, for the first time since October 2022 till now, the company has increased the prices of gas in the Moodys region. Now, they have increased the prices by around 2 rupees per SCM, and this price hike has been done to pass on the rise that we had seen in the spot gas prices. Now, from August 16, that is when the new gas price contracts were announced, the gas prices were increased to around $14.7 per MMBTU from $11 that we had seen previously. So, to pass on this rise in gas prices, Gujarat Gas has gone ahead and increased the prices of gas in the Moodys region by around 2 rupees per SCM. Now, post this price increase, if you see, the gas will become expensive in the Moodys region by around 6 rupees per SCM as compared to propane, which is the competing fuel. However, given the fact that propane prices will be increased from the month of September, this premium of gas as compared to propane would come down to 1 rupees from 6 rupees that we will see currently for the initial few days. Now, if you see, the last week the volume split was in favor of propane with around propane getting around 4.2 MMSCMD of gas, while MMSCMD of demand, while gas had a demand of only 3.7 MMSCMD. So this could still remain in favor of propane, given the fact that propane still looks to be cheaper even for the next month, that is September 2023. Now, this price hike taken by Gujarat Gas, what does that indicate? It indicates that the company is again changing their strategy. Now, in the previous call, they had clearly mentioned that their strategy will be volume focused, but now given that they have passed on the increase in gas prices, they are now trying to keep a balance between volume and profitability. Now, do remember in the first quarter of FY24, Gujarat Gas gross margin stood at close to 8.3 rupees per SM, which was the lowest in the last 6 quarters for the company.
All right. Thank you so much for that. But Somit, stay on, because there are several stocks that are going to be in focus on the back of the FTSE rejig. Tell us more on this.
Announced changes as we were expecting. Now, there were some fresh inclusions and some changes from migrations from, in fact, all cap to the all world index, and this adjustment for these changes will happen on September 15. Now, AIA Engineering is one stock that we need to keep an eye out for, because that has moved from all cap to all world, because of which there could be an inflow of close to $31 million, which is nearly 7.4 times its average daily volume. Now, Syngene is a surprise here. It was expected to see increase in weightage, but it has actually been moved to all world from all cap index, and because of which there could be an inflow of close to $20 million, which is nearly 2.3 times its 20-day average volume. Now, there's one negative news coming in here for KP IT Tech, because that was one stock that was expected to move to all world, but that is not happening here. But other than that, there are a host of other mid-cap companies like Tamil Nadu Mercantile Bank, Capri Global, Safari Industries, Data Patterns, NMDC Steel, Usha Martin, Railroad Children's, RK Forging and JBM Auto. All these stocks have been included in the all cap index of FTSE, because of which there could be some inflows in the range of around $10 million, and these the volumes that we could see in these stocks would be more than 1.5 times that daily average volume. Other than that, there is Hudson Agro and Brookfield REIT, which have been removed from the index, because of which there could be an outflow in the range of around $7 to $11 million, and HDFC Bank would be the key to watch out here, because that stock will see an inflow of close to $500 million because of the merger completion. The weightage has now increased in the FTSE index, and this $500 million is nearly 1.3 times their average daily volume. And lastly, there's Kotak Mahindra Bank, which could see an inflow of close to $65 million, which is nearly 0.7 times its average daily volume.
All right, Swami, thanks for all of those details. We will be keeping a close eye on all these stocks and how they perform in today's trading session. But let's get a move on then. And amid hopes of an excise duty cut on fuel, ET now learns from Finance Ministry sources that there are no plans to cut excise duty on petrol and diesel currently. My colleague Prakash Priyadarshi joins in with more details on this. Listen in.
The Finance Ministry sources are informing that there is no such plan to cut excise duty on petrol, diesel at this point of time. We are given to understand that no such discussion has taken place within the government on this particular issue. Sources are saying that one should not ignore the fact that crude prices have started rising again, which is not a good sign for the Indian economy. When it comes to high food prices led by vegetable prices, sources are saying that the government has taken various steps to tame inflation, but more steps needs to be taken. When it comes to high vegetable prices, sources are saying that it is primarily due to seasonality factor, and the government is expecting that the overall inflation to come down in coming months. However, government will take more steps when it comes to supply constant to provide relief to the consumer going forward.
Well, moving on then, the Reserve Bank of India is emphasizing fairness in penal charges on loans. It mandates that the charges should be reasonable and unbiased. Lenders are required to establish board approval policies for such charges. But what about the debtors? How will it impact the home loan borrowers? My colleague Ankur Mishra is here with more.
Yes, Reserve Bank of India has issued a final circular on the penal charges which were levied by the various regulated entities of Reserve Bank of India. It was found that these penal charges were not uniform. In fact, many of the banks were having their own kind of norms for penal charges, which consumers were facing. Sometimes it was observed that in various NBFCs particularly that the complaints were there that the charges are more than even the interest rate. So now the Reserve Bank of India is saying that there should be a board approved policy for penal charges. They should be well defined. In fact, there should be proper disclosures. For instance, Reserve Bank of India has directed that it should be a norm by the lender that every time a penal charge is supposed to be levied, it should be communicated properly to the customer beforehand with proper communication. So all these directions has been given by Reserve Bank of India in the directions which needs to be effective from January 1. And the most important point here is that the penal charges should not be more than the interest rate itself, and that has been directed to the banks. Now, as far as the applicability is concerned, it is supposed to be effective from January 1, but it will not be effective for credit cards where different norms would apply.
Thanks, Ankur, for sharing with us all those details. But we also caught up with the FIDC Director, Raman Agarwal, who explains what could pose as a challenge against this RBI circular. Listen in to what he had to say.
The moment you say it's a penal charge, so it's a fixed charge. And by changing the nature from interest to charge, there is going to be a direct impact in terms of the levy of GST. So let's appreciate that this penal charge, along with the applicable rate of GST, will have to be paid. And this, we are talking in case of a borrower who has defaulted in repayment. So to expect the borrower to repay this penal charge along with the applicable GST is going to be a tough ask to my mind. And it's going to be a challenge to recover that GST amount from the borrower.
Well, moving on, ratings firm Moodys Investor Service has affirmed India's stable outlook even as it maintains its lowest investment grade for India at the Baa3 sovereign rating. Now, Moodys is citing expectations on Asia's third largest economy growing rapidly. So while Moody has said its outlook on India is stable, my colleague Anurag Joshi joins us with more details on this.
Rating firm Moodys Investor Service has affirmed India's sovereign rating at Baa3, the lowest notch investment grade rating at Moodys. Moodys has kept its outlook for India at stable. Moodys says that it's expecting the Indian economy to grow rapidly by international standards, and that the financial sector of the country continues to be strong. At the same time, the GDP growth is boosting the rising income levels and economic resilience in the country. Moodys has flagged rising domestic political risk in the country. And according to Moodys, the BA rating and the stable outlook also take into account a curtailment of civil society and political dissent, compounded by rising political risk. At the same time, Moodys says that the economic growth will continue to support the gradual fiscal consolidation and the debt stabilization plans of the government.
All right, thanks Anurag for all those details. With that, let's quickly slip into a very short break. On the other side, we'll take you through a list of all the stocks that will be in focus in today's trading session. Hi there, welcome back, and you're still watching Market Cafe on ET Now this Monday morning. And speaking about Monday morning, Ankit, I don't know how your Monday is going so far, but mine's going really well because I have been rooting for Novak Djokovic, who has just lifted his third Cincinnati Open Cup this morning. And it was against Alcaraz, who has already beat Djokovic in the Wimbledon Open just a few weeks ago. So this is a big victory coming in for Djokovic this morning. And Ankita, out of these two guys, who are you rooting for this morning?
It's basically pitting the veteran against the young and the hot and the young. But you can't deny the fact that Alcaraz has beaten Djokovic at the Wimbledon. But of course, Djokovic is a veteran and you can't deny that. So for me, Djokovic it is.
Absolutely, Ankita. I think we share common ground over there because I love Djokovic as well. And it was quite intense towards the end because this match lasted for almost 3 hours and 48 minutes. That's close to 4 hours. And there was also a set of double faults coming in from Djokovic at the end, which meant that he was kind of giving into the pressure that was coming in from the 20-year-old Spaniard. But at the end, this 36-year-old Serbian managed to clinch the title, Ankita.
So basically, Spain wins one but loses one. Wins
Absolutely.
The Women's World Cup, Football World Cup, but loses the Cincinnati
Absolutely.
Cup.
That's absolutely right, Ankita. All right, moving on then, let's also look at all the stocks that are going to be in focus this Monday morning. And to take you through that, we have Ansh joining in our studios. Ansh, good morning. Take it away.
Hi, good morning. So GMR Airport will be the first stock in focus for today's trading session, as they have shared the passenger traffic data for the month of July, which has actually increased by 30% to around 98 lakhs. Apart from this, KC International will also be in focus as they have won multiple orders for construction of hospital, for transmission line project to supply various types of cables in India and overseas. The total value of this project is around 1,000 crore. PNB Housing has successfully resolved and recovered completely from its large corporate non-performing account of around 784 crore through ARC sales. Apart from this, Infosys will also be in focus as company has received communication for collection of penalties from overseas tax authorities. VIP Industries has informed the exchange regarding the resignation of Mr. Anindya Datta as MD of the company with effect from 13th November. Lastly, Tanla platform will be in focus because back in November 2021, company had entered into a partnership with Vodafone Idea for international A2P services. Now, this 2-year collaboration, which is ending this November, won't extend beyond this initial term. So this will have a revenue impact of around 17 crore on a full quarter basis post-November this year.
All right, then thank you so much for all those details, Ansh. We'll move on then. Titan picks up the remaining 27.18% stake in the online jewelry retailer Carrot Lane, and this would be for 4,620 crores in a deal that values the company at 17,000 crores. My colleague Winnie is joining in for more details on this. Over to you, Winnie.
Absolutely. So Titan has acquired that additional 27% stake in CaratLane for 4,620 crore rupees. And this increase in stake, now Titan will hold, after this increase in stake, 98.3% stake in CaratLane. The first transaction and the first time they'd acquired any stake in CaratLane was in 2016, which they'd acquired 62% stake for 560 crores. Now, currently at the price at which you're acquiring, it values CaratLane at around 17,000 crores. And that is approximately 6% of Titan's market cap, which implies a valuation of 7.8 times of FY23 revenue as well. So let's keep an eye out on that. Now, this transaction is expected to be completed by 31st of October 2023. And obviously, this is mainly going to be through the cash balance, mix of cash balance, internal accruals as well as debt. So let's keep an eye out on Titan on the back of this. Now, looking at CaratLane's financial and operational updates also that have come in, EBIT margin of CaratLane is at around 7.3 times, which is slightly lower than the jewelry segment EBIT margin, which we see of the Titan segment as a whole, as well as the number of stores are at 233. Though the growth for CaratLane has been quite strong. So it's an interesting acquisition furthermore in terms of additional stake that they've acquired. Now, Macquarie, they are highlighting that, they're maintaining the outperformance rating, keeping the target price at 3,400 rupees per share, but they've cut the EPS target for this one for FY24, FY25 and FY26 by 2%, 4% and 3% respectively, to factor in the higher interest expenses following that 4,600 crores. That will be a cash outlay for CaratLane stake purchase, which Titan has done. So maybe it could be a bit EPS dilutive in the near term. That's one factor that they're highlighting. Let's keep an eye out on Titan on the back of this.
All right, Vinny, thanks for taking us through all those details. And let's go across to Vamakshi. And first of all, good morning, ladies, and thanks a lot for joining us this morning. Vamakshi, coming to you then. PFC and REC are in focus today as both stocks are climbing on gains on a year-to-date basis. So what are the triggers and what is helping these stocks gain so much? Vamakshi, take us through the analysis.
Well, yes, when we look at PFC and REC, both these stocks are perched near their all-time high levels. When you look at the stock performance, yes, PFC is up nearly 90% on a year-to-date basis. And in fact, this is the biggest gain that the company has posted in the first 8 months of the year since its listing. REC is up over 101% on a year-to-date basis. And in fact, this is also the biggest gain that the company has posted in the first 8 months of the year since 2009. Now, as far as some of the triggers are concerned, macro stability, Government of India's thrust, as well as the strengthening balance sheet of power value chains participants are presenting a robust lending opportunity. In fact, brokerages are also highlighting that the planned power sector capex could create a financing opportunity of almost 98,000 crores by FY30, and they believe that both these counters, PFC as well as REC, are well positioned to capitalize on this opportunity. Their loan mix is also changing now. They are focusing on renewable energy as well as the non-power portfolio, and both these companies boast of healthy dividend payout. Now, particularly when PFC is concerned, they are expecting resolution of few projects to come in FY24, and currently nearly 85% of their total stressed assets are being resolved under the NCLT. Yields are also expected to improve for PFC, and that is what the company has highlighted very recently. REC, on the other hand, in a recent con call, they highlighted that they are targeting to be net zero NPA by the end of 2025. They have not added any new NPAs for the last 6 quarters, and in fact, the NIMs are also expected to improve for these for REC to almost 3.5% for FY24. Now, in the past, there have been concerns with regard to the asset quality for both these counters, but that is now changing. REC is seeing a gradual improvement. In fact, the GNPA was at its peak in FY19 at 7.24%, and it has now dropped to the lows of almost 3.42% in FY23. Now, as far as PFC is concerned, GNPA is at 3.9% for FY25, which is at a 6-year low, with asset resolution of nearly 17,100 odd crores seen between FY20 to FY30. Not just that, the valuations also look quite supportive for both these counters. In fact, analysts are highlighting that the valuations do not fully price in strong growth as well as sustainable, healthy asset quality prospects. So all in all, on the back of this, watch out for PFC as well as REC.
Kamakshi, we will be watching out for all the counters that you mentioned, but a couple of counters more that will be in focus on the back of management meets. Let's begin with data patterns. Let's go across to my colleague Lisa now, who's standing by with the details from the meeting with Incred Equities. Over to you, Lisa.
So in credit equities, they met up with the data patterns, and the management has provided the guidance and outlook going forward for the company. So here are the important takeaways. The management is focusing on increasing the total addressable market of the company, and this will be by increasing their product portfolio. The strategy also will be by actively pursuing the prospects and contracts worth 2,000 to 3,000 crore over the next 3 to 4 years. On the guidance, the management said that they are aiming for a 30% growth in the top line as well as margins. They will be targeting 35 to 40% going forward, and for this they will be doubling up the manufacturing space as well as infrastructure. Also note that in December 2022, the company had raised a QIP worth rupees 500 crore, and the management said that this will be used for developing the product portfolio going forward, and they also added that there are no plans for further raising of the capital. So so data patterns will be in focus on the back of the management meet.
Absolutely, Lisa. Thanks so much for all those details. But with that, I'm afraid we're all out of time on this edition of Market Cafe. But you don't go anywhere. Continue watching ET Now, because the market will take all the action ahead.